Hi viewers, I am Dr. Velavan, faculty, School of Management, Shastra University. In the last session, we discussed about what is GST, what are its tax structure, subsumed tax, then journey of GST, etc. Today, we are going to compute the value of supply for intrastate supply as well as interstate supply, because we have to calculate the value of supply in different manner. When we supply goods from one place to another place within the state, take for example, in Tamil Nadu, I am doing business. I have a head office in Chennai. Now I am going to supply goods from Chennai to Madurai. So this is called intrastate. When the assessee can supply goods or transfer goods from one place to another place, maybe head office to branch or one dealer to another dealer within the state, this is called intrastate supply. It will do either in the state or in the union territory. When we supply goods within the state, now we have to charge CGST as well as AGST, because all of you know GST is a dual taxation system. When we supply or when we provide service to our customer, we have to charge both CGST as well as AGST. That's why this is called dual GST. CGST is for central government, AGST is for state government. Very simple. Or when you do or supply goods from one place to another place within the union territory, take for example, you assume that you are doing business in Pondicherry, Lakshadweep, etc. Okay, so now you have to charge CGST is for central government, then UTGST. So instead of GST, you have to charge UTGST here, because you are doing business in union territory. Okay, so this is what you have to keep in your mind, my dear student. You see, supply of goods or service by A to B. Here A supplies goods to B, that's all. Both are doing business in the same, in the same state or within the state. Either it may be Tamil Nadu or Andhra Pradesh or Telangana or Madhya Pradesh or Delhi, whatever it may be. Here, how can we find out the value of supply? You see, the value charged for supply of goods or services. But you have to mention both, but in practice, suppose you supply goods, here you have to write only the value of supply of goods. You need not write services. When you provide service, you mention services here, you need not write goods. So, value charged for supply of goods or services, 10,000. 10,000. It is intrastate supply, because they clearly mention intrastate, not intra union dental. So here we have to charge two tax. One is for CHT, another one is for HGST. You assume that the rate of tax is 18%. When they tell or ask you to charge 18% or 9% or 12% or 28%, we have to divide into two. We have to divide equally two parts, because first 50 is for central government, the next 50 is for the state which is levying this charge, or the union territory which is levying this charge. Okay. So you take 9% of 10,000 for both. So 900, 900. So the total value of supply is 11,800, my dear student. So this 900 will go to central government. This 900 will go to state government. That's all. This is what the value of what intrastate supply. You see. Now, I have given one note for your understanding purpose, but already I told you. You see, CGST and HGST charged on B for supply of goods or services with remitted by A to the appropriate amount of central and state respectively. The CGST will go to central government, HGST will go to state. A is the first stage supply of goods and hence does not have any credit of CGST, HGST and IGST. Credit means ITC, input tax credit. A person who starts the business, he will not claim ITC, because the first person in the supply chain. Because already you know, I explained the last class about the supply chain. The supply chain starts from the manufacturer and transfer goods from them to wholesaler, then retailer, then customer. This is the supply chain. This is the supply chain. Okay. You see, A is the first stage supply, so he doesn't have any input tax credit for this supply. For this supply. Okay. You see, suppose supply of goods or services by B to C. So after received goods from A, B will add 20%. So this is called value addition. B will add 20% of what? 10,000. 10,000. You see. You see. So here the value addition will given by B is 20%. So now what is the cost price? Value charged by B to C. Value charged by B to C is 10,000. This is the cost price. This was given by B to A so far. Now B has added 20% of 10,000. Now the cost of the product is 12,000. Here B charges. He charged 9% of 12,000. 9% of 12,000. You see. You see. So what is the value of GST? 1,080, 1,080. 1,080, 1,080. Now the total price is 14,160. 14,160, my dear student. Okay. And computation of GST and HGST payable to B to government. How much? B has to pay tax to the government. You see, B has to pay 1,080. 1,080. He has to pay 1,080. You see. But he has a credit of 900 in first purchase, because at the time of buying the goods, we paid 900 for that purchase. This is called input tax. So now B has a credit. B has input tax credit. So it has to be adjusted against the GST paid. Here you have to understand, this is for tax on sale. This is for tax on purchase. The tax on purchase is called input tax credit. When you pay tax on purchase of the same goods you sell today, the amount recovered from the customer will be adjusted the amount which you already paid. This is called tax credit, credit of GST. So the actual amount you have to pay to the government is 180. 180. You see, already we discussed GST is a value added taxes. How much here he has added? 2000. Charge tax only on this 2000 of 9%. This is what 180. This was 180. This is very, very important. And a GST, because he has collected two dual taxes. Now this is the net amount payable to the central government. The net GST payable to the general government 180, because the actual amount collected from the customer, I mean C, 1080. C is a customer here. He already has a credit ITC 900. Then it has to be adjusted against 1080. The balance 180 will be payable to the government. This is for CGST. Now come to the HGST. The actual amount payable HGST 1080. Then credit he has, I mean ITC for HGST, I mean previous purchase 900. So the balance 180 to be payable. So this is what the final payment system of GST, my dear students. Okay, because already I showed, okay, one table. This is the manner of utilization. This is ITC, I mean GST payable in all cases. IGST, when you transfer goods from your state to another state. When we do business in between the state, now we have to charge IGST. This is called interstate transfer. When we do the business within the state or within the union territory, here you have to charge these two. So ITC available. Suppose you have any ITC available in your hand, you have to adjust in this manner. That's why it is called manner of utilization of GST. This is you have to pay to the government, but you have already got ITC. When you have ITC in IGST, you adjust first in IGST. After adjusting IGST, do you have any surplus? That amount will be used for the adjustment of CGST. After adjusting both, even you have a surplus that will be adjusted against HGST. After paying or adjusting all, you have any amount that will be payable to the government. That is the manner of utilization or payment system of GST. Okay. Then for the adjustment of CGST, what is your actual GGST payable? You see the ITC available for GGST. You adjust first. What head you have ITC, it should be adjusted against the core head first. After adjusting the core head, if balance is available, will be utilized for adjustment of IGST only, not HGST. Okay. If anything balance you have to be used to adjust IGST. After adjusting IGST, you have any surplus, directly you have to pay to the government. But the ITC cannot be adjusted against HGST. I mean HGST, ITC available for HGST cannot be adjusted, GCHT cannot be adjusted against HGST. This is very, very important. Then now we come to the last tax structure, HGST or UTGST. You see the HGST, UTGST payable. You have a ITC, you adjust first in HGST payable. If anything available, you adjust again IGST. After adjusting both, you have to pay to the government. But the ITs available for HGST or UTGST cannot be used to adjust the GGST. This is what you have to keep in your mind. The same information, the same rule is applicable here, my dear. Applicable here. This is what the way of set off or adjustment of IT's input tax. Okay. This is a revenue for both the central and state government. Supply of goods by A to C. In stage 1, we have collected 900. In stage 2, we have collected 180. This 180 is only for value added. I think 2000. 2000 has added by B. So charge 9% for 2000. So 180 will come. 180 will come. You need not claim GST for whole 12,000 because already you pay tax for 10,000 at the time of buying goods from A. Again, you need not collect tax for the 10,000. I mean, pay for the 10,000. But you have to collect tax for entire value of supply from the customer because this is a destination tax. You see, my dear student, who is responsible for tax? Who has to pay entire GST to the government? The supplier, the customer will pay. The customer, they have to pay tax to the government. We collect entire tax from the customer. But meanwhile, who are all available in the supply chain, they have to pay tax only for their value addition. Only for their value addition. How much they add? They have to pay tax only for the added value, not the previous cost. That is very, very important. Interstate supply. Interstate supply means when we do the business or when we supply goods from one state to another state. Take for example from Tamil Nadu to Karnataka, from Karnataka to Madhya Pradesh to Andhra, Andhra to Kerala, Kerala to Odisha, Jharkhand, Mizoram, Gujarat, Sikkim, whatever. The trade should be happen in between the state, not within the state. Okay. You see, supply of goods or services by X of state 1 to A of state 1. You have to read the sentence carefully. But what heading we put here? Interstate supply. But you see here, supply of goods or services by X of state 1 to A of state 1. X of state 1. Both are doing business in the same state. I mean state 1. You take it as state 1 is in Tamil Nadu. So both are doing business in Tamil Nadu. Suppose you take it as one is Maharashtra, they are doing business in Maharashtra. Both are doing business within the state. So here we have to charge CGST and HGST. You charge. So value of supply, how much? 10,000, 9%. Okay, good. Now the value of supply, taxable value of supply is 11,080. We discussed the previous. Now, supply of goods by A of state 1 to B of state 2. Here A bought goods from X. So here A has ITC because he is paying tax for purchase. You got to understand clearly. He paid tax on purchase. This is ITC. This is called input tax credit. This is called input tax credit. ITC. Both ITC. ITC in CGST, ITC in HGST. It has to be adjusted against in the next stage, you see. Now, value of goods or services by A of state 1 to B of state 2. You see, A is one state and B is also in another state. They are not doing business in the same state. They are doing business in different states. One is for Andhra, another one is for Maharashtra, or one is for in Tamil Nadu, another is for Karnataka. But the value addition is 20%. So A has added value of 20%, so 12,000. Now you have to claim, you have to charge not CGST, HGST. You have to charge IGST. IGST, that is very, very important. When we supply goods from one state to another state, now we have to charge IGST, not HGST, CGST. But when we supply goods from one city to another city within the state, or one person to another person within the state, now we have to charge CGST and HGST. But when we import goods, when we export goods, when we supply goods from one state to another state, here we have to charge IGST, my dear student, not CGST and LGST. Okay, so IGST is 2,160. So now A has, B is a buyer. B has ITC. B has ITC. Okay, so B will claim this amount against when he sell this goods to the customer. Okay, now what is the amount will payable to the government? IGST payable 2,160. They have a credit of CGST, HGST. Both are eligible to adjust IGST. So you have to adjust. The balance will be payable to the government. That's that. That's that. How, sir? He has to pay to the government 2,160. But already he has what? 900 ITC. So this ITC can be adjusted against IGST paid. IGST paid. This is ITC. This is tax paid. This is, they are the tax on purchase. This is tax on sale. Okay, tax on sale. When we have a tax on purchase, it has to be adjusted against tax on sale. This is the process of adjusting ITC, my dear student, or process of set-off of ITC. Okay, this is what the way of calculating the final settlement to the government. In next stage, supply of goods or services by B of state 2 and C of state 2. Again, B supply goods to C. But here he has added 20%. 20% of what? 12,000 cost price. Because here the cost is 12,000. In stage 1, cost is 10,000. In stage 2, cost is 12,000. Stage 3, the cost will be 14,400. Now you charge, here you see both are in same state. State 2, state 2. So same state, we have to collect CGST and SGST, 1,296, 296. So total value of supply 16,092. Okay. Now we have to see how it has to be adjusted. GST payable 1,126, 1,126. But B has already ITC in IGST. You see IGST. So it has to be adjusted against CGST. But B has 2,160 IGST, but already it is used 1,296 for CGST adjusted. Now it has to be taken, deducted. The balance will be 864. It will be adjusted against GST. The balance to be payable to the government 432 only. B has to pay to the government. This is what the procedure for calculating settlement, final settlement. Okay. I hope all of you understand how can we charge GST at the time of doing business within the state and between the state and within the union territory or between the union territory. Okay. And also how can we adjust or set off ITC against the GST payable. Okay. Good. Now this is very, very important one. GST common portal. You see, my dear student, already we touched about the registration process. What is registration? All persons, those who are touched or reached the threshold limit of turnover, like 20 lakh or 40 lakh or 10 lakh, depends upon the different state, they have to register their business. The registration process will be done only in the system, because this is a computerized method of collection system. Computerized collection system or methods of collection system or methods. So we have to enter all information in the GST portal. Then we have to complete our registration. So before sit in front of the system, we have to keep ready all the relevant documents. We keep ready with all relevant documents. Then we have to sit and then start your process. Once you complete the registration, this portal will open. This is called common portal. Okay. Common GST electronic portal. You visit this website. Everything will display. You see, website managed by Goods and Service Network. There is a network, it's called Goods and Service Network. A company incorporated under the provisions of Section 8 of the Companies Act 2013 is set by the government to establish uniform interface for the taxpayer and common and shared IT infrastructure between the central and state. There is a portal, there is a body. There are some people are taking care of all network issues. They have a separate format and portal. They communicate with central and state government and ask them, all the traders, those who are eligible to register, they have to register. The GST portal is accessible over internet by taxpayer and their CAs or tax advocates. You you can register your business directly, or you register your business with the help of your taxpayer or tax consultant or advocate. No problem. But your presence there is very, very essential, because you have to give the relevant information. You know what is what. The intranet by tax official, etc. The portal is one single common portal for all GST related services. This is a common, because I already told you this is one tax, one nation, one administration. This is one nation, one tax. And also we have only one administration, central, common administration. Nobody will enter and alter the components or will change the components in the portal is highly important. Highly important. Because once you registered, they will give one registration number. Later on, you have to use this registration number for login and also give some information and in this portal. Others will not do like that. Okay. A common GST system provides linkage to all state, union territory, commercial tax department, central tax authorities, taxpayers, bank and other stakeholders. The ecosystem consists of all stakeholders, starting from taxpayer to tax professional and officials to GST portal to bank and accounting authority. They have sent this link to all stakeholders. Here, stakeholders means who are all connecting or connected to the GST, particularly government, taxpayers, bank, business people, practitioners. They are all called stakeholders. The government will send all link, and will provide infrastructure facility to the taxing authority, administrative people. This is what you can be able to see in the system. Once you complete our registration process, this page will come. Okay. The functions of GSTN, Goods and Service Tax Network, include facilitating registration, forwarding the returns to central and state authorities, computation and settlement of IGST, just we discussed before, matching of tax payment details with banking network, providing various MIS reports, management information system reports to the central and state government based on the taxpayer return information, providing analysis of taxpayers' profile. Everything. It is important to note that the common GST electronic portal for furnishing electronic way bill. It is available in the website managed by the National Informatics Center, Ministry of Electronics and Information Technology, Government of India. They give permission to take a computer printout for your value of supply or service. Once you register your business, you cannot issue a manual bill. You have to give a computer bill. Computer bill. You have to issue. This bill will consist of the value of supply, what tax you collect, either IGST or CGST or HGST. Everything will be mentioned clearly. Okay. So e-way bill is an electronic document generated on the GST portal evidencing movements of goods. E-way bill. It's not a manual bill, electronic bill. But this bill is the documentary evidence of the movements of goods. Movements being supply. It is a documentary evidence because we calculate. How can we calculate? We will calculate our overall turnover or gross turnover based on the bills available in our hand. Okay. But it bill shows how much CGST we collected, how much CGST we paid at the time of purchase. This is called ITC. How much SGST we collected and paid, how much IGST we collected so far and paid. Everything is available. You need not write anything manually. Suppose you want the cumulative GST value, okay, the comment, the system will show the overall amount collected by you by way of GST and in the name of GST or AGST. Okay. This is a e-way bill system. This is a display. You see there are some icons in the top. You see here. You can, this is for registration. Once registration, you have 3 ledgers. Automatically your icon, your page. Once registration, the system will give separate page for you along with all the 3 ledgers. Okay. Electronic cash ledger, credit ledger, and payment receipt. GST. In GSTN, a selected certain information technology enables services and financial technology companies to be called GST Svidya providers, GSPs. They are the developers, system IT developers, you have to know. They are the authorities for operating all GST portal. Whenever we have a doubt and queries, we have to approach them. They will guide us to rectify the problem. They facilitate the taxpayers in uploading invoices as well as filing of returns and act as a single stop shop for GST related services. Everything. They will help us to prepare an invoice bill and file income tax return and payment of tax and some other issues. Everything they will clarify. They facilitate the taxpayers in uploading invoices as well as the filing of return. Act as a single stop shop for GST related services. They facilitate taxpayers uploading invoices because every quarter we have to upload our invoices. Because every quarter we have to file quarterly return. Every month we have to file monthly return. And also we have to file half-yearly return, annual return. At the time of filing return, we have to attach all the relevant documents. Here documents is nothing but invoices at the time of filing. Okay. The next one is compensation chest. Dear students, we discussed this one under structure of GST. We discussed in the first session structure of GST. The structure of GST is number 1, IGST, CGST, SGST and compensation. When we supply goods, we collect CGST, SGST or IGGST. What is compensation test? The GST compensation is a specified rate has been imposed under the Goods and Services Tax and Compensation to State Cess Act 2000 on the specified luxury item or demerit goods like pan masala, tobacco, the aerated waters, motor cars, etc. computed on value of taxable supply. So when we supply, when we calculate the value of supply for supplying of pan masala, tobacco, aerated water, then motor car, because they are coming under the GST permit. GST permit, not exempted, but the government will not charge GST for the above product, pan masala, tobacco, aerated water. So here the government will charge compensation, cess, instead of GST. Okay. Compensation cess is available on intrastate supplies and interstate supplies, with the value of providing for compensation to the state for loss of revenues arising on the account of implementation of GST. This is shared. The compensation checks will charge by both state and central government. This amount will help them to avoid or adjust loss of revenues arising on account of implementation of GST. Because the implementation part is very, very tough. Because after a long journey, in the year 2017 only it was implemented. Unless otherwise, high task, tough task. Compensation is to be provided to state for a period of 5 years from the date on which the state bring in a GST Act into force. That is very, 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 very important. Okay. Then, what are the subsumed taxes, or what are the taxes we paid before introducing GST? That is very, very important. They are called subsumed taxes. You see, before GST regime, we have paid 17 major and minor indirect taxes and cesses. You see, hope you understand. You see, my dear student, before GST, we were paid 17 types of major and minor tax, direct tax for our supply, for our buying, for our sale, everything, you see, which were existing prior to GST. But they have replaced. But now they have replaced. After GST, we have only one tax. This is what GST, not for all, you see, all. Everything is cancelled. The taxes that were levied by the central government. What are the taxes were levied by central government? What are the taxes were levied by state government? So, previously, even today we are paying double taxation, dual taxation, but one is GST, GST, but previously we were paid in different component, in different names. One is central excise duty, duties of excise and medical and toilet preparation, duties, additional duties for excise, goods and special important, and additional duties of excise, textiles and textile products, additional duties of customs, commodities known as CVD, then special additional duties for customs, SAD. Okay, I mean special additional tax. This is additional duty for commodities, central sales tax, cess and surcharge, services tax. So totally 9 different taxes we were paid before introducing GST. But after introducing GST, now we are paying only one tax. Not so many tax like central excise, duties of excise, additional duties of excise, textile. No, we are paying only one tax for our consumption. What are the taxes were paid to the state government? You see, state VAT. VAT means value-added taxes, purchase tax, luxury tax, entry tax, entertainment tax, then tax on advertisement, tax on lotteries, betting and gambling, state cess and surcharge. These are all the taxes we were paid before GST regime. But now we are paying only one tax. So you have to know why, what is the advantages, what is the unique features of the GST. It is the unique feature. So before we paid so many taxes. Before we paid so many taxes. Now we are paying only one tax. You see, we paid to the central government. Here we paid to the state government previously. They are called prior GST receipt. You see, these are the taxes we paid, the central and state. Central excise duty and additional excise duty, service tax, excise duty under medical and toilet preparation, CVD and special CVD, compensatory value added taxes. Then central sales tax, central surcharges and cess in so far as they relate to supply of goods or services. So they are all for central government. Then for state government, state surcharge and cess in so far they relate to supply of goods or services. Entertainment tax, then tax on lottery, betting and gambling, entry tax, purchase tax, value added tax, sales tax, luxury tax, tax on advertisements. So we paid so many taxes instead of one tax. That's why we paid huge money for a product, consumption of product. Okay, this is what the tax structure, because I already told you, single tax system, single administration, uniform law, computerized uniform procedures. They are not the manual. But in GST we have 3 taxes, already told you. One is CGST, a GST or GST, then IGST. This is the structure, GST structure in India. When we charge CGST, when we charge GST or GST, when we charge IGST, okay. This is called pre-GST indirect tax structure, central tax administration. We have so many authorities, so many departments, multiple state taxes. You see, multiple sales tax administration, multiple act rules, multiple procedures. But now everything is eroded. Only one. We have only one. This is called what? GST. That's why it is called single tax. Single tax administration. Uniform tax. Computerized and uniform procedure. So I have given, I have shown, I have displayed this slide for your quick understanding. Okay, hope all of you understand. Good. Now we have to know what are all the products are within the GST or outside this GST. Outside means they are not exempted, but they are not coming under GST purview. That's all. If the government decides, they will charge GST later, not now. Okay, you see. Alcohol for human consumption. Alcohol for human consumption. Suppose the people, those who are having drinking habit, they buy a beer and hot in Taskmark or in Star Hotels, they may not pay GST. 5 petroleum products: crude oil, diesel, petrol, natural gas, and ATF. Aerated water. Here, it is used in aeroplane. Okay, aerated water. All are not coming under the GST. Okay, but they are not exempt. Entertainment tax levied by local bodies, tobacco. Here you see, power to tax remain with the state. If state decide, they will charge GST for all. GST Council to decide the date from which will be applicable, because they have not charged GST for these products, because once they charge, the revenue of GST will reduce. Because now we are paying excise duty for them. It is more than that of the GST. More than that of the GST. That's why the government is keeping silent regarding charging GST of this type of product, my dear. So no GST for alcohol for human consumption, petrol, diesel, natural gas, entertainment tax levied by local authorities. Take for example, we are going to organize a program in a mahal which is owned by the local authority, Tanjavur Municipal Corporation, Chennai Corporation. Here we need not give any GST for that mahal, this hall. Simply we have to pay only hall rent and other maintenance charges. That's all. Not necessary to pay GST. Then tobacco, cigarette and all, we need not pay because they are huge consumption. The rate of consumption are very, very, very high. The people are consuming heavily. That's why they are not charging, and they are charging high price also. You know, what is the per liter petrol rate of petrol per liter? If we are paying 103. Suppose they charge the GST for depreciation, the price will come down to 60 or 70. But it is a benefit for the people, not for the government. That's why they are not interested to charge GST in the following 5 products, my dear. Okay, they are within the GST, but not charging GST. List of major taxes prior to GST with respect to tax event: service tax, provision of services, excise, central excise, manufacturing of goods or other medicines and toilet preparation. We paid whenever we manufacture a goods or buy medicines, we have to pay excise tax. Not now. Excise on medicines and toilet preparation, central sales tax, sale or purchase of goods or inter-state or cross-border India, VAT value addition, entry fee, entertainment tax, then advertisement tax. Previously we paid. This is the purpose of payment, tax. GST, a tax on goods or services. This is a tax on goods and services, but we have not charged levy on GST. The following: what alcoholic liquor for human consumption, and petrol of crude oil, diesel, petrol, aerated fuel, and natural gas. Okay, but they are not exempted. It is under consideration. When the government decides, they can or they may charge GST for that. Then nothing in this slide. Okay, structure of GST in India. GST is bracket by the following structure: operative structure of GST, the manner in which tax shall be levied and collected; legislative structure, act and rules; administrative structure, how the government has set up administration system for implementation; tax structure of GST, types of taxes payable under GST. So this is the structure. But one tax, one nation, one administration, but dual taxation. You see here, tax structure of GST is nothing. Here we have to charge, or we are charging CGST, SGST, and IGST, dual tax. Then operational structure, determination of tax under GST, to ascertain happening the tax event of supply, because the event of supply is nothing. The moment in which place we are going to charge tax. Identifying, classification of supply, whether it is intrastate or interstate. Rate and exemption, we have to know. Ascertain the value of supply after charging. Ascertain the tax payable after adjusting ITC. Identify the person to tax pay. Ascertain and compute the available ITC. then payment of tax. These are all the operation structure regarding determination of tax under GST. One is ascertainment happening when we have to charge, and identify what is the nature of the trade, whether it is inter or intra-state, what rate it is applicable, or whether they are exempted or not. To ascertain the value. What is the value? What is the total cost? How much we charge CGST? How much we charge SGST? Everything. To ascertain the type or taxable IGST, SGST, and identify the person to pay tax. To ascertain, compute the available ITC, then payment of tax. Okay, very simple. Procedural complaints under GST. Procedure number 1: registration, filing of return, maintenance of account, audit. All the 4 are very, very important. Once you registered your business, you have to do all GST registration, filing of return, maintenance of record, audit. Then enforcement of provisions under GST. Then adjudication, dispute relating to the payment and credit available situation, appeal. If any they have dilemma or queries, appeal. Or when the tax authority punish them, they will go for appeal. Then interest and penalties and prosecutions. These are all the enforcement provisions under GST Act. Then administrative structure of GST, the Ministry of Finance is taking care of all aspects, the Department of Economic Affairs, Department of Revenue, Department of Expenditure. The Department of Revenue will take care of, consist of Central Board of Direct Taxes, CBDT, and Central Board of Excise and Customs, CBEC. Central Board of Excise and Customs include the following person: Principal Chief, Principal Commissioner, and Principal Commissioner Tax Appeal, and Commissioner of Central Tax Audit. So they are coming under CBEC. Then Commissioner of Central Tax Appeal, Tax Commissioner, and Additional Commissioner of Central Tax, and Deputy Commissioner, Superintendent, and Inspector. They have different offices in different level. They will take care of all activities. Okay. Then calculate the value of supply. This is for the next we are going to calculate, because we need to know what is the value of supply. For an intrastate supply, 10,000. If rate is 18%, when they give, you have to divide it by 2. So you have to charge 9% for both. Okay, 9% for both. So value of supply 10,000. Here you have to charge CGST and SGST. So the total taxable value of supply is 11,800. This is called intra. Because when we supply goods within the state, we have to charge CGST and SGST. Already we discussed, already we saw one problem also. Okay. For an intra-union territory, here you have to charge UTGST instead of SGST. In UTGST, in union territory, you will do the business within the union territory, not go away to other state also. Okay. So 900, 11,800. Then interstate, you have to charge IGST only, not GGST and HGST. You know clearly we discussed in the previous, I think, the earlier stage of this session. Goods outside GST. What are the goods are not under the GST purview? Not means what are the goods are not charging GST now. Okay. Alcohol for human consumption, already we discussed. 5 products of petroleum, 5 petroleum products: crude oil, diesel, petrol, natural gas, and ATF. Aviation, fuel. I think aeroplane. They are using this type of fuel only for aeroplane. Then tobacco, entertainment tax levied by a local bodies. So these are all the goods outside the GST purview, not exempted. Anytime the central government will charge tax for these products. Okay, but it is the discretion of central government. In next topic we have to discuss is advantages, benefits, and limitations of GST. So what are all the advantages of GST? What are the benefits of GST, what are the limitations of GST. That is very, very important, because the question paper setter will ask one question: what are the advantages, benefits, and limitations of GST? Here, the advantages for citizen, traders, government, and customer. So everything we are going to discuss one by one. Don't worry, one by one. Don't worry. Okay. So thank you very much. We'll see in the next session. Thank you. Thank you very much for taking it.